Pick and Pay, bottom of the top 40, losing 5.5%, but then just about everything else apart from the gold stocks was weaker today.
Yeah, certainly there wasn't a lot to get excited about on the market. Things started off pretty bad. We saw the market under a bit of pressure because of some tightening in China on the reserves there. And then this news coming out from S&P that they were downgrading the outlook on the US long-term credit from stable to negative really put the cat amongst the pigeons, and we saw the market come off very, very heavily towards the close. We were down almost 3% on the futures when I left.
Yeah, because that really seems to have taken the market by surprise, because the JSE really falling quite sharply this afternoon. We saw the US markets also opening weaker and then extending those losses. Why do you think it's been taken so badly? Because surely this is something that the market always thought might happen.
Yeah, I think at the end of the day, markets have come off a good run. We've seen a little bit of uncertainty creeping back in. We're now into a short week. We've got the Easter holidays coming up. You already had some bad news out there. So I think just adding to the reasons to sell, and I think a lot of people starting to square off. I don't think it was just purely on the basis of the S&P downgrade, but I think it really accelerated what we would have likely seen over the course of the week, which probably all happened mostly on today.
Some of the other concerns, we have European sovereign debt problems, as you mentioned, raising their head again. And all of these things seem to have faded into the background when we had that earthquake and subsequent tsunami over in Japan. But they obviously really didn't go away, did they?
No, and I think that's what's going to be playing out now for the next couple of months. And I think, we're also heading into that seasonal time for the markets, going into the European summer quite shortly. Also sell in May, go away kind of fever in the market. So, you're sitting with global markets still close to 3-year highs. You had all the uncertainty of the tsunami. Markets basically recovered all of their losses in a very short period of time. And I think a lot of guys saying, well, where to from here? Not a bad time to be taking some off the table.
What are the technicals telling us at this stage? What sort of key trading levels have we been passing at this stage, and what sort of pullback would you expect on the markets at this stage?
Well, we broke through the 40-day moving average on the top 40 today. That was around 28,500. I think also the 100-day also at pretty much the same point. If we really want to look technically, I suppose your real support's about 5% below where we are currently, sort of 27,500 at the moment. And that could be where you see the market pull back before finding its legs. I see this as a buying opportunity once again. I don't think that the equity markets, I don't think it's the end of the bull run by any means. But certainly, if you're looking to time your entry into the market, you could see some more weakness for the next couple of days.
So a buying opportunity if we had that pullback of around 5% on the market?
I think most definitely, for sure.
Not much corporate news out today. We had Pick and Pay's results, and I was chatting about them with Donnie just a moment ago, but the market really appearing to take those numbers quite badly, despite the guidance that had been given by the company that we could expect a loss of up to 25%.
Yeah, I think if you have a look, that trading statement came out at the end of March. I think then you saw Pick and Pay was around $48 then, and it sold off on the back of that. I think today really taking its cue from the forward-looking statement saying that they don't see things improving in the next 6 months. And I think, on a weekday on the market, plus poor results coming out, plus expectation of tough time to come, you're going to get a little bit hammered, hence the 5% fall.
Well, we also had a trading update out of Foschini just a short while ago, and that company expects profits to rise by 19 to 22%, so really at the opposite end of the spectrum from Pick and Pay.
Yeah, I tend to agree with your previous speaker, though, that a lot of the retailers really price for success at the moment. So I'm not sure that on the back of that would really be rushing out to go and buy them. I think a lot of that's in the price.
Brett, gold stocks doing quite nicely today. We had Harmony, Anglo Gold, all up a short while ago. Of course, we have got that gold price testing new highs at this stage, and the weaker rand as well. Do you think, is this something you'd be looking at, or do you think this is just a short-term risk-driven move on the gold stocks?
Yeah, I tend to prefer the physical over the actual underlying gold shares. So I think the rand gold price looking good. That broke through 10,000. Gold price looking like it's going to push through 1,500. So I'd be looking to stay long of gold at this point. The gold stocks always a little bit more tricky, but obviously they will benefit from the back of the stronger rand gold price.
How about some of those diversifieds not doing well today? We had copper pulling back. We've got oil also trading weaker today. Of course, we had China raising its reserve requirements again over the weekend, and expectations that we could see interest rates going up again as soon as Easter over in China. Would you be steering clear of the diversifieds at this stage, just given the risk to those commodity prices?
I think a lot of that's been priced in at current levels. I mean, you see the likes of Anglo's back around 333, I think, at close today. You know, starting to get into real buying territory again for me. So I think, as I said earlier, if we see a little bit more consolidation in this market, one can use it as a position to accumulate for. The likes of Billiton, Anglo's having come back quite nicely and looking quite attractive at these levels.
So perhaps sit tight ahead of the Easter holidays, Brett.
Sorry, what's that?
So perhaps investors should be sitting tight ahead of those Easter holidays.
Yeah, I don't think if you're a very short-term trader, I don't think there's any need to rush out for the next 3 or 4 days, because I think we can expect a little bit more weakness in the market. But if you're a long-term purchaser and we're seeing these kind of levels coming in and you do see a little bit more weakness, I would be accumulating.